Welcome to The Drawdown, a podcast by Cherry Beckert's Private Equity Practice. In each episode, we explore the latest trends in the private equity sector, as well as challenges and opportunities in the ever-changing investment environment.
Welcome to The Drawdown. I'm Cameron Smith, Managing Director with Cherry Beckert's Private Equity Practice. In today's episode, we will highlight how investors can go beyond basic commercial due diligence by diving deeper into the voice of the customer. We will break down various approaches to VOC analysis and how it can impact portfolio company performance. I'm joined by Kristel Kurtz and Richard Schwartz, partners in Cherry Beckert's Strategic Growth and Innovation team, and who lead the commercial due diligence practice. Kristel, Richard, great to have you.
Thanks, Cameron.
It's great to be here.
Kristel, what is voice of customer and how can it be a lever to drive value during an M&A process?
In mergers and acquisitions, we often get caught up in the haste to get to the deadline and to get the deal done. Within that, voice of customer is a valuable analysis that brings context to the valuation models and the growth forecasts, and it allows the sponsor to build an understanding of who is this target company? Who are they selling to? What are their customers' needs? How does that customer make decisions? And who within that customer's team is actually doing the purchasing of their products and services? Also, how does the target company stack up against competitors or other options customers might have to do something themselves instead of buying something from the target company? All of these pieces put together allows a sponsor to develop an understanding and validate the target company's growth plan, the feasibility of reaching their goals, as well as the additional investments or capabilities that need to be built within that company to achieve these plans and hopefully outperform.
Richard, would you describe the various VOC approaches that might impact private equity?
Sure. We found time and again that private equity, both on the buy side and the sell side, can benefit from voice of customer in the threefold phases of a deal lifecycle. At the front end, pre-deal, diligencing the deal. As Kristel spoke to a moment ago, there's a tremendous amount of value in speaking to customers and potential customers about the differentiation of the offers and the way in which the target sells those offers to really strengthen the deal thesis, as well as to uncover any potential risks that might exist in terms of, as an example, a founder-led model that really relies on that founder's charisma to sell and deliver services, as well as potential risks around churn and other types of risks that oftentimes will come to bear post-close. The second is that we see a lot in growing the deal, that we can do voice of customer that allows us to more deeply understand how customers buy, and therefore how we can intersect those buying processes with our sales and marketing efforts, as well as what are the things that drive customers' purchase decisions, their main parameters of value, and how are we performing relative to competition so that we can tune up either how we sell or the value that we deliver. At the tail end of a deal lifecycle around preparing for exit, we also see a great deal of benefit because oftentimes nobody speaks better about your firm than its customers. And so customers can actually provide the testimonials that provide the basis for describing and driving valuation on the differentiation of our offers, as well as the scalability, that customers want to buy more services or offers from the platform as well.
Kristel, would you describe an example of utilizing voice and customer during commercial due diligence?
A recent example that comes to mind is an engineering services firm. A private equity firm was looking at acquiring them. This was at the point of an LOI. The hypothesis was this engineering services firm could be a platform where they could in future tack on other engineering services acquisitions too. The approach was twofold. One was blinded management interviews to be able to candidly understand what they thought their strengths were and their ability to bring new services on board, coupled with approximately 50 customer interviews over about 2 weeks. The customer interviews revealed that the firm relied heavily on existing relationships with sellers who had been there for quite a while and had deep expertise in their solutions. This led to an understanding that post-acquisition, the private equity firm would need to invest in strengthening the sales force, strengthening their ability to conduct lead generation, possibly adding hunters to the mix, and even going so far as to look at the overall operating model of how sellers could specialize in hunting and being experts in the solutions that they provide.
Richard, same question. Do you have an example or case study?
Sure. So working with a buyer that was looking to build a platform of services into the independent dental practice to complement a mainline distribution business that it already owned, starting with services around insurance and the revenue cycle. They identified an on-the-market target that had been a fast-growing, relatively young firm in the space of dental verifications and negotiations with insurance companies. The buyer had 3 risks that they really wanted to deeply understand, and Voice of Customer helped them on each. The first was, given how relatively young this firm was and how fragmented the market was the business really differentiated? And conversations both with its existing customers as well as prospects confirmed that there was great brand awareness as well as differentiation around the offering. The second risk area was, given that this firm was so young and so dependent on a founder, what was the risk there? Conversations with customers revealed really how integral the founder was, and it drove the buyer to structure the earnout in such a way that the seller would be involved, the founder would be involved in the deal post-close to be able to support his relationships as well as drive new demand. The final risk area or opportunity was the degree to which there would be more headroom for these types of services and related services that could be sold in a dental practice. And here again, speaking with customers revealed how they thought about outsourced services and actually built a short list of the next wave of services that they would be interested in acquiring, which for the buyer caused them to have more priority on other types of deals that they would be pursuing post-close to grow the target.
Thank you, Kristel and Richard. It's interesting how Voice of Customer can create such an impact to an investment strategy by simply and strategically talking to a company's customers. To our listeners, we appreciate you taking a few minutes to learn more about Cherry Bekaert's commercial due diligence practice and our Voice of Customer methodologies. For more information, we have a recent white paper published on cbh.com/guide, or please contact one of us at any time. Take care.
Thank you for listening to The Drawdown, Cherry Bekaert's private equity podcast. The views presented by our guests do not necessarily represent the views of their respective firms. For more information on how Cherry Bekaert serves as a guide forward to private equity funds and their portfolio companies through accounting, tax, and advisory services, please visit cbh.com.